Hey everyone, this is Dan with Data Trend. Today is Wednesday, March 23rd, 2016. It's about 2:30 p.m. or so Mountain Time. The market's closed a half hour ago. Well, we had a little bit of a red day out there today, but it wasn't really too much to get excited about, and we're going to talk about that here. The S&P 500 closed the day at 2036.71. It was off 13 points, down negative 0.64%, 0.64% that is. Um, and you can see here we just kind of pulled back a little bit. We're still up and above the rising 10-day simple moving average, which is this yellow line here. We did close below the 5, which is the gray. It's a little bit difficult to see. It's rising and it's up here. It's probably actually starting to flatten out a little bit. But the market's still pretty well extended up and above the rising 20-day simple moving average, which is all the way down here around let's call it 2003 or so. So it has a ways to go before it even gets down to this level. And if we drop down to the lower time frame, the 65-minute time frame, you can see here that the market did sort of hover around this 2040 level that we've been watching, and from there it kind of tried to rally back up, found a little resistance around the 5-day simple moving average, and from there it fell lower. This yellow line here is the 5-day simple moving average, and the red is the 10-day simple moving average. But for the time being, really no significant levels have been violated on the shorter term time frame. We haven't broken down and broken through this, called the 2010-ish area, 2005, 2010. If the market was to trade down and below that and then find a little bit of resistance up higher when it tried to rally back up, then we could say, okay, maybe there's a little bit of shift in sentiment. For the time being, what it really seems like is there was a little bit of a correction in here today, but there's not really any reason just yet to get exceptionally bearish here and say, okay, the market's breaking down. The market could actually certainly come back up here, test this 2057 level, and push into a new high. And I did make some trades today, and we did reverse Harvey the April 5 CIB, and that was sort of a defensive trade in the case that we do get the market moving back up and higher. Really when the market came and it broke through this 2040 level, there wasn't a lot of conviction and follow through, and that in and of itself is reason to question the pullback here and ask ourselves if it doesn't have the potential to continue higher. I certainly, would prefer that it pulled back, but the market really doesn't care what I think or what you think or what we want it to do. So we just have to kind of observe what we see taking place and then make decisions based on that. After the reverse Harvey adjustment was made today, it did pull this upper expiration break even in ever so slightly, maybe down to about 2055, which is just slightly lower here. I mean, we can just grab this guy and just pull it slightly lower. But from a practical standpoint, it's really not going to significantly change where we adjust this position on the upside. We're still going to be looking to make an upside adjustment if the market trades up and above about that 2060 to 2065 neighborhood. We're going to let it get up there and prove itself to us if we want to take off this lower butterfly and move it up. So let's hop over and take a look at the position, and we'll also look at the spreadsheet as well. And in fact, let's go ahead and look at the spreadsheet first. So the initial trade started here. We had the butterfly with a long call, and we had the 2055, the 1990, and then the 1925. And we reversed Harvey that initial butterfly back on March 16th. And what we did is we sold out the 2055, we moved it down to 2050. We sold out the lowest put and we moved it up one. So we kind of choked up on this butterfly a little bit. And then a couple days later on 317, or I guess the next day, we went ahead and added another split strike butterfly. And so we had the 2085, 2025, 2020, and then the 1955. And so this was another butterfly, but the short strikes were split slightly, and that was just to make sure that delta was a little bit flatter. Otherwise, delta would have been a little bit too short, and so we were just trying to keep that T plus 0 line relatively flat. Well, today you can see in the spreadsheet here, what I've done is I closed out the 2085 and moved it down to 2080, and closed out the 1955 and moved it up here to 1960. And so you can see those adjustments have, for some reason it's not scrolling over here, for some reason those adjustments come up to these calculated profit and then also loss based on those two adjustments. And so the floating loss for all of the adjustments, including commissions at this point, is about $105, and there's an offsetting gain that's still open on this, so this isn't really a firm number or anything, but the net effect of all of the adjustments right now is about negative $105. Okay, so let's hop over and take a look at the analyzed graph, and we'll keep that negative 105 in mind. So what we have here is the position as it sits today, and to include those adjustments up above in the analyzed graph, what I've done is I've added on an order to buy and then an order to sell an option. So I'm buying it for 105, which is the cost of our adjustments, and then selling it out for 0. So that has the effect of creating a $105 loss on the position because the analyzed graph only includes the portions of the trade that are open. So the position as it sits right now is up to date up here, and we also have the SPY calls down below as well. There haven't been any changes to the SPY calls. But the position as it sits today with the market at 2036.71, the delta is negative 676, the gamma is negative 0.05, the theta is about $20 a day, the vega is negative 74.62, and there's an open profit on the trade now of about $82 or so. So that's pretty good. We've been in the trade for, let's hop over here and look at the spreadsheet again. I think a little bit over a week, about a week and a couple of days, maybe 9 or 10 days. Yeah, so we've been in the trade for about 9 days. We have 37 days to expiration, and we're starting to show a little bit of an open profit, so that's good. If we get a little bit deeper pullback, we'll have to take a look at this position and think about, if we need to do anything. If we start to pull back very deeply, we may want to take off this upper butterfly, but for the time being, we're just going to sit in this trade. You can see here how the expiration break even moved in slightly down to around that 2055 level. But again, trading kind of up and above into that 2060 is really what we're going to be looking at for making an upside adjustment. If the market was to gap 1% higher in the morning to that 2057 area, we'd have an open loss on the trade, maybe about negative $59. But for the time being, everything is still under control. The Greeks look good, and the position is healthy. I did also want to just mention RUT in here as well, because I trade RUT, and I'm sure that many of you trade RUT. And RUT had a little bit of a deeper pullback today. The market closed at 1075. It was off 21 points, so negative 1.97%. And the Russell really moves in general on an intraday basis more than the S&P 500, as I think probably everybody knows. But you can see this market's come all the way down. It's crashed below the 5-day and the 10-day, and it's getting close to the 20-day simple moving average. But in the context of this little bear market rally that we're looking at here, the market still hasn't violated any of these levels of support. If we were to say that this is a support level down here, maybe in the neighborhood of 1065 or so, draw it in here. If we were talking about some support down here, maybe in the neighborhood of 1060, 1065, and then even a little bit deeper down in the neighborhood of 1055. If the market was to break through some of those levels, it would be a more significant violation on the downside, and there'd be reason to suspect maybe that we're heading back lower down, at least towards the 1037, which was this prior high here back in late January. And the story pretty much on the 65-minute time frame that we're looking at now is relatively similar. We kind of have this chopping back and forth of the 5 and 10-day simple moving averages. The market just seems kind of like it's consolidating in here. It's pulled back within to this area of the prior consolidation, from down around 1053 up to 1094. And that's a relatively wide range if you think about it. But it's pulled back into this consolidation, and at the same time, it hasn't broken below that 1063 level right here, or that lower level down around 1054. So, for the time being, this sort of looks relatively neutral as well, even though I'm sure many non-directional traders out there really would like it to be more bearish than that. For the time being, we just haven't seen that. But we do see a little bit bigger break here to the downside in the Russell today, but for the time being, still looks relatively neutral. So at any rate, that's all I have for tonight. I hope it helps. If you have any questions, as always, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.